Welcome back, and joining us to put the day's market moves into perspective is Martin Smith from Anchor Capital. Thank you so much for your time, Martin. Things are not looking good. Everything is in the red. Even the rand is now back above at 19 rand against the US dollar. Of course, markets digesting the US consumer inflation print for January that came out hotter than expected, even though it was actually down from December. What are markets holding on to here with this print?
I think it's about the rhetoric of higher for longer. And I think the market for a long time was just really hopeful of the fact that we get a cut in March. If you look at what the market was pricing in at the beginning of the year, it was that there was a 50% chance of a cut in March and a 100% chance of a cut by May. That's what it looked like at the beginning of the year. That now has changed to a 0% in March and a 40% chance in May only. So the market has kind of really come to the realization that it's going to be a little bit higher for longer, and that obviously feeds into sentiment and into equity prices.
Yeah, quite interesting. Of course, we will be looking out for comments coming out of Fed officials, but also our own figures, and also what impact that print could have on our own inflation and monetary policy direction here at home. Talking about home, let's go into some of the news, company news that came out of the JSE. And of course, Transaction Capital is always an interesting one because there are always these wild swings in the share price whenever they come out with an announcement. And of course, they had two announcements today, both on WeBuyCars. So there was an update saying that the board is actually going to pursue the unbundling and separate listing of WeBuyCars. But also they gave us a voluntary 4-month trading statement, I guess, to kind of support the value proposition of WeBuyCars for investors. Share price up over 8%. Is this confirmation that WeBuyCars is something to be banked on?
So, I mean, the management are looking for ways, and they announced it a couple of weeks ago, of trying to get value for shareholders. Obviously, the share price fall has been dramatic over the last few months. So they're doing what they can to kind of find value and create value for shareholders, and unbundling WeBuyCars is one of them. So as you mentioned, they're doing that. And I think that's the way that you need to look at this business now, is a sum of the parts kind of valuation. And we get to, if you do the maths on our side, around 12 Rand a share. From our side, even if you assume that you get nothing for SA Taxi, obviously if that improves and that whole situation improves, then you can see a kind of high valuation. But some of the parts is the kind of way to look at it now, specifically with when WeBuyCars is unbundling. And again, the numbers that they put out today were quite decent from a performance and operational perspective. And again, just trying to underline that this is a decent unbundling opportunity, and that you can apply a multiple to this business. And it had a bit of a reaction that they would have hoped for, 8% up in a market that's quite down today.
Yeah, and it is quite interesting actually to see this momentum on WeBuyCars, because there were concerns, I think, early last year that WeBuyCars was losing the high momentum that we had seen in around 2021, 2022. But it's quite encouraging to see now that they've rejigged their strategy as well, to kind of be accommodative to the current market trends. Let's go into gold mining. Gold Fields up with a year-end trading update today. The miner saying that it expects its headline earnings per share from continuing operations to be as much as 25% lower. To me, it is quite surprising, considering, of course, what we have seen in the gold price that has driven these stocks higher and their profits higher. What did you pick up there in terms of the drivers of this performance?
Yeah, like you mentioned, you've had a higher gold price, you've had a higher rand dollar price as well. So I think when it comes to the gold sector, I mean, you can probably make a case for gold prices being higher from here, central banks buying risk, the kind of risk averse nature of it, and then also the function of interest rates at some stage going lower globally. But it also depends on which one you want to choose. And I think if you had to look at the sector, I think Gold Fields hasn't been our preferred pick for a long time. And I didn't see anything today that would kind of change it. So if you want to make the play on gold, I'm not sure if I would do it via Gold Fields.
All right. Well, what about a play in building materials? Cashbuild was out with its interim trading update today. The company is saying that it expects its bottom line to plunge by as much as 25% from the prior comparative period. The share price movements were quite confusing and volatile and different because earlier on, it was actually up more than 2%, and then I saw towards the end of the session down almost 2%. I mean, is just this a sign that investors are maybe confused and undecided about the company's prospects at this point?
I think it's a couple of things. So one, share price is down over 10% in the last month or so. It had quite a big fall in January. Another thing is it's relatively illiquid. So it can move kind of, as you described, in quite volatile on very small shares. So like you mentioned, up to down 4, down to on quite small quantities. So I think it also speaks to the liquidity profile of the business itself. But I think it also, what we saw from a performance number that we came out with, that Cashbuild came out with, is very much a function of what's happening in the SA economy. You've got high interest rates, you've got consumers that are under pressure, economies under pressure, and until that changes, I don't think this is a business that I'd be wanting to bet on just yet.
Yeah.
And probably trading on about a forward 10 times multiple, which is probably the right price. So happy to sit on the sidelines until we see a bit of a turnaround and probably trading at fair value.
We don't have money for home improvements this year, Martin. Let's get to your stock pick for today. What will it be?
So I think depending on how this offshore market reacts in the coming sessions, I think you could see some nice opportunity there. But the one that I did choose was Curro. I think you got some numbers out last week. It looks like this business can grow 20+% from a headline earnings per share perspective for the next 2-3 years. And in a market where we're struggling a bit for growth, I think it's a nice opportunity. So Curro.
All right. Well, thank you so much for your time and for your insights on what has been driving investors' money today. That was Martin Smith from Anchor Capital.